What is going on? My name is Colin Mason, and today I wanted to give you a little bit of behind-the-scenes look at my complete business plan. More specifically, this top strategy, what I call my main strategy, which is building a Bitcoin treasury. That's been my biggest mission since I joined this space. I was really bought into the idea that Bitcoin is going to be worth a heck of a lot more in the future than it is today because of so many different reasons. And so my mission from the get-go is, hey, how do I build the biggest bag of Bitcoin that I can inside of my treasury? And when I started learning about DeFi, this was several years ago, when I started learning about DeFi, this idea that we can lend assets, use them as collateral, and then borrow against it to deploy that capital elsewhere, I started making connections to real estate or to hard assets like gold or silver, or even some stock portfolios and some traditional financial investments like that you can use as collateral and borrow against it. And so when I started learning about, oh my gosh, I can do this digitally with a few clicks of a button and not have to go through a centralized entity like a bank or a brokerage firm or anything like that, and I could just do this digitally, decentralized, and within a few click of buttons free up that capital and use it as collateral. For me, it was just absolutely mind-blowing. But one thing I want to address really quick, and because if you're seeing this video, you're probably saying, oh, borrowing, debt, that's not a good thing. We should stay away from it. And I will say, I was the product of David Ramsey growing up, right? Product of David Ramsey. I love David Ramsey. He's taught me a ton about personal finance and responsibility and all of this. And so I kind of grew up with that mindset of, debt is really bad and we should stay away from it above all else, right? And I do agree with that, especially when it comes to consumer debt, right? When we're borrowing money to buy things that we don't necessarily need, that I agree with him on that. However, I want to break that idea that all debt is bad. And the reason being is because if I use my Bitcoin as collateral, which I'll show you here in a minute, if I use my Bitcoin as collateral and then borrow a very healthy amount against it, like 35% against it, I can then take that borrowed capital, that borrowed USDC, and deploy that somewhere else that can start working for me. And what's great about this is that capital, that borrowed capital that I use, can now go work in like a liquidity pool and generate rewards and income for me there, which I can then use to then either pay down the loan, right, number one, or I can use it to buy more Bitcoin. And that's what I'm doing. I'm using this as a accumulation flywheel effect where I can use my current Bitcoin as collateral, borrow against it, deploy that borrowed capital into liquidity pools, into cash flowing engines, and then take that income generated from those vehicles and then use it to buy more Bitcoin. And it's this beautiful flywheel effect that I've been doing for over a year now, but since last August, I've been doing this where it's just a nice, beautiful flywheel effect. And what I actually wanted to do in this video is click, like step-by-step click and show you my system, especially my tracking system. So that's kind of the back end thing that I think a lot of people miss, right? They do really well with the clicking of the buttons and depositing capital into various positions and strategies, but they kind of miss out in two areas. Number one is the visual map of the system. So this is my personal system. I don't mind showing it with you. I show this on live calls in UIG and in Fast Track. I don't mind doing it. This right here is my entire map. Like, this is my system. And right here, this top one is my Bitcoin accumulation strategy, where I'm lending CBBTC, wrap Bitcoin, borrowing stables, deploying that into a liquidity pool, collecting those rewards, and then funneling it back into more Bitcoin. It's this, again, this flywheel system that I'm doing. What I wanted to highlight today is specifically not the liquidity pool aspect, but really the new capital injection, how I go from my centralized exchange where I on-ramp my fiat into crypto. How do I lend that? I'm going to do it here on Aave on the Arbitrum chain as wrap Bitcoin, and then I'm going to borrow a little bit against it to kind of show you that process. The one thing I will mention is that as I'm recording this video, Bitcoin is 120K. It is actually, let me pause this. I'm going to bring up the screen of Bitcoin because I want to show you why I'm not going to be on-ramping all of my capital into Bitcoin at this very minute. Let me show you that why. Give me a sec. Okay, so as you can see, I mean, I'm looking at Bitcoin chart on the daily, and we see this massive run up. I mean, this is such a great thing. We see this big run up of 10% in just the last couple of days from 109 to 120. So with that being said, I'm not trying to buy the top, and so the way I like to think of this is a sort of like a dollar cost average strategy, where I'm going to keep on-ramping capital. I've on-ramped the capital into USDC on Coinbase, and then I'm just going to be using that to just continuously buy Bitcoin and add it. So today I'm only going to do about 200, maybe 300 $100, where really I want to move another like 3K into this opportunity. I just don't want to move all 3K and buy Bitcoin at the, I don't want to say the top, but we're at a very significant level of resistance here at 120. which again is a pretty big psychological number. And then we can see all-time highs here at 123. So I'm not necessarily looking to, again, on-ramp all of my capital into Bitcoin right here where we're seeing a massive run-up. I'd like to see well, I wouldn't like to see it. I'd like to see us to continue to move to the upside. But what I'm anticipating is to hit a little bit of resistance here, come back down, and then I might scoop up a little bit more if we come back down. If not, and we continue to run, then I'll just keep DCAing in and I'll just keep building my flywheel. But for me right now, I'm not looking to buy what could be the top of this run up if we do see a bit of rejection here at 120. So with that being said, I'm going to share my screen again, and then I'll actually show you the process of on-ramping that capital, moving it into my lending position, tracking it in my spreadsheets, et cetera, et cetera. So let me do that really quick. Okay, now we're back here. The other thing that I mentioned, so the first thing that I think people don't necessarily pay attention to all that much is the setup, right? And so what I was trying to say before is this is my business plan. I build this before I start moving capital and really start to scale up my operation. I want my entire system to be visually laid out for me so that when I inject new capital, it goes somewhere and I know that it's helping me achieve the goals that I have for myself. So that's sort of the first thing that I get members in the UIG and in Fast Track to really focus on is, hey, let's build the system first, then we can scale the operation once you've tracked it and once you realize, okay, this is working as I expect it to. The second thing that I have people do, and people don't do it, I just think that they're not giving themselves the full picture, and that's the tracking system, right? So this is my personal tracking system. Again, I don't mind sharing this. And I have lending positions on Sui, on Solana, on the base chain, as well as Arbitrum across a series of different assets. And really what I'm looking for is two things, right? The two metrics that I'm looking for is, number one, the LTV, right? So for me, I have personal thresholds in place, right? And I use this silly analogy all the time. When I was living in Texas, I was driving my car, and the tire pressure light came on, right? The tire pressure light came on. I was driving to the grocery store because I needed some food. And I said, okay, let me check the tire pressure. Okay, my front left tire is low. It's low. It's not like flat, but it's low. I need to put some air in it, or I need to address, maybe there's a hole in it, but it's low. I asked myself, can I continue to go to the grocery store? Can I continue to do my errand and then come back home and address this tomorrow? The answer was yes, right? Everything was fine. It was just giving me, my dashboard was giving me a little bit of a warning that, hey, this is something you need to pay attention to, okay? That's the same thing I use LTVs for. I use this dashboard as like dashboard in a car, right? If everything is green, that's fine. I can continue to drive. Everything is normal, right? I'm not going to stay up late worrying about it if my car is not showing any signs of warnings. No lights are coming onto the dashboard. But as soon as my LTV rises above 45%, that's my personal threshold. For me, that's a little bit of an indicator, right? For me, that is, hey, your tire pressure light is on. So when it's above 45%, hey, tire pressure light's on, pay attention to this. Whenever it goes above 60%, which for some people might be high, maybe it's 50%, maybe it's 55, some people it's 65, whatever, you have to decide what your personal threshold is. For me, it's 60%. If my LTV goes above 60%, everything else stops. I am pulling over to the side of the road because now I don't just have a tire pressure light, I have a check engine light, and this thing is flashing and blinking at me. So if there's smoke coming out of my machine, I need to pull it off to the side of the road and I need to address it. The same concept applies here in my LTVs. As soon as it rises above 45%, I start to pay attention to it. If it rises above 60%, nothing else matters. I am stopping my operation and I am fixing the problem. When it gets, and let's talk about this really quick. What makes an LTV rise? Well, two things could happen. Number one, your borrowed amount continues to go up, which it will, right? So you're paying interest on the borrowed amount. Let me actually show you my Aave position really quick. Let me show you my Aave position. I don't mind doing this here. So let's go to, it's on Arbitrum. So I'm going to go to the Arbitrum chain. Here we go. I'm logged in. So we can see here I'm lending wrap Bitcoin. I'm lending 0.057 wrap Bitcoin over here. And then I borrowed $3,000 of USDC against it. Well, I'm paying 6.56% in this USDC. So this is going to be compounding on top of itself at this rate. And so my loan, my value of my debt is going to be increasing at this rate. So over time, this borrowed category is going to be increasing. That increase in the borrowed column will increase my LTV. Right? That's number one. The other one, which is a little bit more drastic, is if the lent asset goes down, right? So on my Aave position, I'm lending a wrap Bitcoin right here. wrap Bitcoins right now is 120K. If Bitcoin were to drop to 110 and then 100 and then 90 and then 80, my LTV would rise because the value of my lent side is going down. So two things to drive the LTV up would be the lent asset goes down in value or the borrowed amount goes up in value. And so those are the function of all of that is just one number, and that's the LTV. So for me, I want to keep my LTVs below 45%. If they're below 45%, I'm a happy guy, and they all are. The other thing that I'm going to be doing, and I'm doing it right now, I know this video is getting kind of long actually, so I'm going to focus on this. I'm going to on-ramp some capital from my Coinbase account. I have $3,335 worth of USDC. I'm just going to move $300 into my hot wallet here, and then I'm going to deploy that as wrap Bitcoin into Aave. So I'm just going to do that all right now. So what I'm going to do is I'm going to grab my public wallet address right here, and I'm going to paste it in here. So I'm going to do that real quick. Okay, then what I'm going to do is I'm going to click this, the three buttons right here. I'm going to go send, and then I'm going to paste in this wallet address, and then I'm going to just confirm everything and send. For security purposes, I'm not going to show all of that, so I'm just going to, do it privately, and then I'll show you the capital that went to my wallet. But that's the process. You'd come here to your centralized exchange, you'd go to USDC, you'd go to send, you'd copy and paste in your public wallet address of where you wanted to send it to. You'd select the chain that you want to send it to, and then click confirm. I'm going to do that all privately really quick, but that's the process that you would take. Okay, so now that I'm here, I'm just going to send 300 USDC of my USDC there. Okay, I confirmed everything. That should have sent. There we go. I'm going to press done. Next thing I'm going to do is going to come over to my wallet here. I'm going to go to Arbitrum, and I should see my USDC reflected in here pretty soon. I do already have 2,500 in here, so that should be plenty to do this this test. Yep, my went up. It should be. Should be coming in here pretty soon. Give it another second. Oh, there we go, 2,800. So my 300 is coming successfully. The next thing I want to do is I'm actually going to go to Uniswap because I need to acquire my wrap Bitcoin. So right now I have USDC. I'm going to make sure I go to trade. I'm going to go to swap. I'm going to come in here, and I have USDC on Arbitrum. So I'm going to say USDC on Arbitrum, and I'm going to select wrapped Bitcoin on Arbitrum. You can see here. So USDC to wrap Bitcoin. For me, I'm just going to do $300 worth. And I'm going to do that here. I'm going to go $300 of USDC to wrap Bitcoin, 0.00249. I'm going to press review. I'm going to press swap. I'm going to confirm that. Now my wrap Bitcoin should be, there we go. My wrap Bitcoin should now be in my wallet. Let's check it here. Yep, there it is. So now I have 0.0025 wrap Bitcoin on the Arbitrum chain right here in my wallet. The next thing I'm going to do is I'm going to go to Aave, right? So now that I've acquired the asset that I want to lend, I'm going to go to the platform that I want to provide it on, and I want to make sure I'm on the correct chain. So I'm on the Arbitrum chain on Aave. Aave is the biggest lending and borrowing platform that's out there. So next thing I want to do is I actually want to add more to this balance right here, right? So I want to make sure that I'm supplying more wrap Bitcoin. So I'm going to come down here to assets to supply. I'm going to find wrap Bitcoin. I'm going to press supply, and I'm going to supply the max. I'm going to supply all my wrap Bitcoin in here. You can see that when I do that, my health factor is going to increase. My health factor is like a different way of showing the LTV. For me, I personally just like to see the LTVs, but health factor is a good way to represent that. So my current health factor is 1.79. When I add this wrap Bitcoin, it's going to move up to 1.87, which is great. I'm going to approve my wrap Bitcoin to submit. I'm going to press sign and confirm. Confirm it over here. Then I'm going to press apply. I'm kind of flying through this, but hopefully you're following me. Okay, all done. So now I've supplied the wrap Bitcoin. I'm going to press close, and now you can see that I have more wrap Bitcoin in my supply side. You can also see that my health factor has increased. Now, what I really want to make sure that I do is after I do this, I want to make sure I track it properly, right? So what I'm going to do is I'm going to come over to the lending cheat sheet here, and I'm going to take the quantity of my Bitcoin and make sure I paste that into the quantity of my lent. So you can see right here, I'm going to find my Aave position, Aave on wrap Bitcoin on Arbitrum. This is the token price. This is the amount of tokens lent. What I'm going to do is I'm going to paste in what my current value is, and you can see that that lowered my LTV. I'm actually going to go back so we can pay attention to that. My current LTV is 43.64%. What I did here is I added the correct amount that I'm actually lending. When I click enter, you can see that my LTV over here went down from 43% to 41%. So my position got healthier because I added more collateral. And so if I were to go back to my Miro board system right here, if we really look at this top section, we can see this is what I'm doing. I've injected new capital into my wrap Bitcoin. If I wanted to borrow some stables, which I'll do right now to show you, but I can borrow some stables and then I can move that into my liquidity pool. So if I were to go back to Aave right here, you can see that I, again, have more wrap Bitcoin that's supplied as collateral. So my treasury of Bitcoin has increased. And now what I can do is I can actually borrow some more USDC. So I'm just going to borrow 10 USDC just to show you. But what I want to do is show you how easy it is. I'm going to go to Arbitrum. And I just want you to hone in on this. Right now I have 2,592 USDC right in this wallet. What I'm going to do now is I'm going to go into Aave and I'm going to borrow another 10 USDC. So you can see USDC right here. I'm going to click borrow. And I'm just going to borrow 10 USDC. It's going to show that my health factor is going to drop just a little bit. And when I go to borrow this USDC right here, this USDC is going to go straight into my wallet, right? So the power of this is that I can maintain my Bitcoin exposure and free up capital. I do have to pay this amount, and it's variable, so it's going to change over time depending on the utilization rate. But I've borrowed now $3,010. If I go to my account up here in Rabby and go to Arbitrum, you can see I now have $2,602. That 10 USDC I just borrowed went straight into my wallet. Now I can go to Uniswap and I can go open up a liquidity pool with that borrowed USDC. And with that borrowed USDC, now I can go deploy that in a liquidity pool and start generating fees and rewards. And I can take those fees and rewards and move them into more wrap Bitcoin. And that is that flywheel effect that I'm talking about. And so the only thing I would mention is I like to keep my, I mentioned it before, I really like to keep my LTVs healthy, right? And so now what I need to do is I need to reflect that new borrow. So I'm going to come in here to my tracking sheet and say, okay, now my liability here is $3,010. You can see that raised my LTV up just a little bit, but it did raise it up. That's it in a nutshell. It's fairly easy. I know this video was getting kind of long, but hopefully my explanation makes a lot of sense here. So I'll summarize. What I really want you to do is build out your system, get your strategies, get your goals in place, have it all right here. And what I use is a Miro board, get it all in front of you so that you know, as you inject new capital, where is it going and how is it helping you achieve your missions and goals. The next thing you want to do is actually click the buttons, do test amounts. So always send small little test amounts through first and then confirm it works as you expect it to, and then go from there. The second thing that you really need to do is make sure you track. So there's plenty of spreadsheets out there. There's a lot of different platforms. We're building DeFi Buddy, which is our kind of in-house application software. It's going to be free to use so that you can use this to track your position. So we're very much hard at work doing that. But for now, I'm just using my spreadsheet. This is a great way for me to come in here and to look at my current LTVs, make sure that they're below the certain thresholds that I've set. And it's also great because it gives you that liquidation price. So you can see, and I didn't mention this, I will right now. You can see this liquidation price is 64,352. That means Bitcoin would have to drop from 119,000 down below 65,000 for me to be at risk of liquidation. For me, that's a very healthy position. I don't believe, knock on wood, I don't believe Bitcoin's going to drop from 120 to 65,000 overnight. So when I put my head on my pillow at night, I'm not worried about being liquidated because I have set up enough of a buffer and enough of a health of my position where I don't think that's going to happen overnight. Now let's say this was much higher. Well, that doesn't make sense. Sorry. That's because that's over. Let's do 6,000. What is that? If I borrowed 6,000, nope, it's still too much. If I borrowed 5,600, nope, still too much. If I borrowed 5,200, right, on my borrow side here, well, that shows my LTV right here at 72.48%, way above my personal threshold. What that liquidation price tells me is Bitcoin would have to drop from 119 to 111 for me to be at risk of liquidation. that's something that could happen overnight. So this position for me is really unhealthy, and I need to make sure that I address that. So for me, I want to always make sure that my LTVs are in a healthy position so that I'm never at risk of liquidation. Hopefully this makes sense. I know this video is a little bit longer than anticipated, but hopefully it gives you kind of a little A to Z in terms of how to on-ramp capital, move it into the asset you want to lend, supply that as collateral, borrow against it, deploy that into a new strategy that generates income or cash flow for you. And then if you want to complete the cycle, you take that income and cash flow, wrap it around into the asset that you want to build as that treasury. And now you have a beautiful flywheel system. And now every month or every week or however you want to do it, you can DCA into that collateral asset, build your treasury over time, and ultimately build a system that helps you achieve your mission. For my mission, it's building a Bitcoin treasury. This system is on repeat for me, and it works beautifully. Hopefully this makes sense. If you have any questions, let me know, and we'll talk soon. Peace.